Okay, let's dive into this. We're going to talk about the money you don't even realize you're spending. We're going to really dissect this quiet financial drain that affects millions of people, a lot of times without them even seeing it happen. So let me ask you a question. What's America's biggest financial problem? Now, if you're like most of us, your first thought is probably something like, well, people just aren't earning enough money. But what if that's not the real issue here? The research we're digging into today makes a really strong case that the core problem isn't the size of your paycheck. No, it's something way more subtle. Here it is. The real problem isn't some big, sudden financial disaster. It's the slow, steady, almost invisible drip, drip, drip of money leaving your pocket every single month. It's a series of tiny little leaks that over time can absolutely sink the ship. So let's put this monthly drain under a microscope, shall we? We're going to basically perform an autopsy here to figure out exactly what this hidden enemy is and, more importantly, how it works. And here they are, the usual suspects. You've got the car loans, the credit card balances, a dozen different subscriptions for everything under the sun, and of course the big one these days, buy now, pay later. These things have become so normal that, honestly, we don't even think of them as real debt anymore. And that's the genius of it, isn't it? A single $15 subscription feels, well, it feels harmless. A small monthly payment seems totally manageable. We tell ourselves, it's just a couple of coffees a month. No big alarm bells are going off. But when you add them all up, you take the car payment, the subscriptions, the credit card interest, they create this powerful current that just pulls you under. This is the exact mechanism that keeps so many people on a financial hamster wheel, running faster and faster, but never actually getting anywhere. I just love this line from the source material. It says, "Interest doesn't shout, it whispers." Financial trouble isn't this loud, blaring alarm. It's a quiet, constant hum in the background of your life, just slowly and silently eating away at your future. So how does this even happen? How did we all get here? Well, believe me, it is not an accident. The entire system of consumer finance is built on a really deep understanding of our own psychology. It's all designed to make spending feel easy and totally painless. This slide just captures the whole trick perfectly. I mean, look at the left side. A $30,000 price tag feels like this huge, scary mountain of debt, right? But then look at the right. You just reframe it as only $4.99 a month. And suddenly it feels like a small, totally manageable step. It's the same amount of money. It's just packaged to feel a whole lot less threatening. And the real consequence of this is that a huge chunk of your income is already gone before you even get to decide what to do with it. Your past decisions, that car you bought 2 years ago, the subscriptions you signed up for last month, they are literally controlling your budget today. And this brings us to something called lifestyle inflation. As your income goes up, there's an entire industry, an entire system designed to make sure your expenses go up even faster. This isn't a personal failing. It's a feature of the system. You're constantly being pushed to upgrade your car, your phone, your whole life, and to finance all of it. I mean, just think about how our financial world is set up. It rewards spending with points and cash back. It rewards borrowing with instant gratification. Debt is marketed to us as being smart and totally normal, while the slow, patient act of saving, well, that's often seen as old-fashioned, maybe even a little boring. Okay, so how do you fight back against a system that is literally designed to keep you spending? Well, it starts with a really simple but incredibly powerful mindset shift. It all comes down to asking yourself a different kind of question before you buy anything. According to the research, the biggest difference between the wealthy and pretty much everyone else isn't just how much money they have in the bank. It's the mental framework they use to make financial decisions. They literally just think about money in a different way. This is the question that most of us are trained from a very young age to ask. Can I afford the monthly payment? It focuses all of our attention on that small, manageable number. And you know what? Because the answer is usually yes, the cycle of debt just keeps on going. But here's the mental power switch. The wealthy ask a totally different question. They ask, what is this really costing me long term? See, this question forces you to look beyond the monthly payment and see the true cost, the years of interest, the lost opportunities, the impact on your future freedom. This slide shows the two realities of interest perfectly. On the left, when you're in debt, interest is like pushing a giant boulder uphill every single day. But on the right, when you save and you invest, that very same force starts working for you. It's like the boulder is rolling downhill, gathering momentum all on its own. The entire goal is to switch which side of that hill you're on. So, this brings us to maybe the most crucial point of all. You don't escape this trap by getting some huge raise or winning the lottery. You escape it by simply understanding the rules of the game you're playing. And here it is. This is the key takeaway of this entire explainer. The path to financial freedom isn't about earning more money. It's about leaking less. It's about taking control of the income you already have. So what's the first step? It's really simple. Before you start chasing a higher income, first, you have to master your current expenses. Your main goal should just be to understand exactly where every single dollar is going. That's it. You know, motivation is kind of like a rocket. It's super powerful, but it burns out fast. Discipline, though, discipline is the tortoise. It's slow, it's steady, and it always wins the race. This is all about building small, consistent habits that become your financial defense system. And please, remember this. This isn't about being a math genius or creating some complex spreadsheet. It's just about awareness. Because once you truly see the slow, quiet drain for what it is, you can never unsee it. And that's the moment everything can start to change. So, I'll leave you with this final thought. The financial system is built on one simple principle: consistency. Small, consistent payments can keep you broke for a lifetime, but small, consistent savings can build incredible wealth. The system itself doesn't care which one you choose. So the only question left is, are you using its power to trap yourself, or are you using it to set yourself free?